Good evening, members. I'm Councillor Rob Field, Chairman of the Audit, Governance and Standards Committee, and I'm pleased to welcome you all to the meeting this evening. Before we commence proceedings, can I take the opportunity to advise you that if the fire alarm sounds, please remain seated and Democratic Services staff will assess the situation and provide further guidance as necessary. Tonight's proceedings will be webcast by the Council, but if anyone else is intending to record proceedings, can I ask now that you let us know, not to stop you from doing so, but simply to make everybody in the room aware. Okay, thank you. And finally, just a reminder to everybody, can you please make sure you deactivate your microphones when you've finished speaking. So, item 1, apologies for absence. I have had apologies from Mr. Dobbs, who is poorly, but apart from that, I think we've got a full slate. So no substitutes for item 2. Item 3 is urgent items. I've had none. Item 4 is visiting members. There are none present. Item 5 is disclosures of lobbying by members and officers. Are there any such disclosures? Lovely, thank you. Sorry, item 5 was just disclosures. Item 6 is disclosures of lobbying. But we're clear on both, thank you. Item 7 is to consider whether any items should be taken in private because of the possible disclosure of exempt information. Members of the committee will note there are yellow pages today. I move that the information contained in the exempt appendix relating to complaints be considered in public. But the information therein would remain private, i.e. that's on yellow pages. If during the discussion members wish to discuss the detail on the yellow pages, then we will have to pause and I'll have to move that we go into closed session in order to do so. Is that agreed? Thank you. Item 8 is the minutes of the meeting held on the 19th of January 2026. Move that the minutes of the meeting held on the 19th of January 2026 be approved as a correct record and signed. Is that agreed? Thank you very much. Item 9 is question and answer session for local residents. I've received no notifications of questions. Item 10 is for questions from members of the council to the chair, and I have received no questions from members either. Which takes us on to our first substantive item at 11, the External Auditor's Audit Plan, which you will find on page 8 of your papers. Call on Sophia Brown, Key Audit Partner, to introduce the report.
Thank you, Chair. Good evening, members. I'll take the audit plan as read, but just pick out a few highlights for you. Going to page 15 of the papers, it sets out the highlights of the audit plan, and just to draw your attention to the significant risks for the 25-6 audit. These are the standard inherent risks of management override, and also in relation to revenue recognition, but the revenue recognition risk we do rebut for this authority, and we don't see that there is a significant risk in the area of the council's income streams. And then we also have the valuation of land and buildings and the valuation of the net pension fund liability as the significant risks for the 25-6 audit. We've also set out here the materiality, which at this stage is 2.7 million. And a specific low materiality of £20,000 per individual senior officer when we look at the remuneration disclosures and also the disclosures around termination benefits. In the report, we also pick up progress with prior year recommendations that we've raised in audit findings reports. So those are from page 24 of the pack onwards. The main changes for the 25-26 audit are, in accounting terms, there is a code change around asset valuation. So this is a change where assets are now subject to a rolling five-yearly valuation cycle, which is in accordance with the CIPFA code. But the change is that in intervening years, in between the 5 years that an asset is revalued, the current value is going to be updated using appropriate indexation, unless a desktop valuation exercise is required if there isn't a suitable index available. So the authority will adopt this approach for the first time in the 25-26 financial statements, and it is a substantial change to the accounting for non-current assets. We have been talking closely with Adrian and the team about arrangements for that and the discussions that the finance team are having with the valuer. The requirement to assess potential material change to any assets not revalued in year has been removed. So that is something that we have reported on previously, but that's no longer a requirement. And some authorities might like to value high value assets on an annual basis, so that is no longer that would no longer be code compliant. So we would expect assets to be only fully revalued every 5 years according to the 5-yearly cycle set. And then the second change for the 25-6 audit is around the audit timeframe. So we are going to report to the September audit committee, but we will be starting our work a couple of weeks earlier than we did last year. And we will plan to finish in mid-September in advance of the September Audit Governance and Standards Committee meeting. On page 27 of the pack, I have set out the work that we are planning to do in April, and that's early testing. So this isn't something that we did last year, but we want to make as much progress as we can with the audit work and audit testing so that we can get some assurance under our belts before the summer when we start the full audit. I'll stop there for any questions.
Thank you. I'll go to members first. Are there any questions on the plan? Councillor Drewinski.
Thank you, Mr. Chair. I suppose the only question I've got is the team sort of relatively the same as it has been in the last couple of years, and are we having new staff in?
So the team remains broadly similar. We have had the audit manager depart in the last couple of weeks, but I've been speaking with Adrian and there's no disruption. I'm working with the audit in charge closely so that we can finish the planning work and do the interim testing, and there'll be another manager in place before we start our work in the summer.
Councillor Barwick.
Just thinking about the local government reorganisation and the assets, will they not have to be valued and kept up to date? Because I'm sure when local government reorganisation happens, whether it's 1, 3, 4, whatever, value of assets will need to be known before they transfer.
Unless I've misunderstood, that's the purpose of the change, is it not? To have a more current view of the asset valuation?
So the process from prior financial years has kept it up to date. This is just a change to how the valuation takes place so that it's possibly after this first year of implementation going to be less onerous going forward.
Yes, I can just add to that. Because both Kent County Council and Maidstone Council follow the same accounting standards as you would expect, there will be alignment between the way that we in Maidstone value our assets with how Kent County Council values their assets. So at the point where we and Kent County Council prepare our last balance sheets, which is 31st of March 2028, assuming local government reorganisation goes ahead, we think that that will give a clean starting point for any new unitary authority. As it happens, Grant Thornton are also Kent County Council's auditors, so I think all the arrangements are in place to make sure that when a new unitary authority is formed, then it will be starting from a clean position so far as the assets are concerned.
Councillor Cooley.
Could you please just remind me again why the materiality for the council is 2.5% of its gross income rather than 2.5% of the income that it actually handles by way of operations. Thank you.
Thank you. The benchmark is set as 2.5% of the expenditure because it's the spend that we feel that the users or your residents would be most interested in. 2.5% is set by the firm-wide for all of our public sector local government entities.
Yeah, please do.
I think that's my absolute point. The residents of our borough have got no say whatsoever in about, is it 75% of gross revenue that goes through the books. They only have an interest in that proportion which looks after waste services, etc., 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 which is, say, at the 25 million level. So why 2.5%, fully understand that, but why is the reference the gross money going through the accounts rather than that proportion of the revenue that actually looks after what the residents of Maidstone Borough Council want from MBC?
Thank you. We look at it from the perspective of all of our users of the council, not just specifically for this council. But what we have done is when we review that percentage, we look at the environment that the council operates in to see if we should adjust it down. There's no reasons or indications why we should use a lower percentage benchmark, so we've gone for the maximum one.
Councillor Cooley.
A final comment on that, then I have a separate question. So level of materiality, if 2.5% applied to that proportion of revenue, which actually went to the direct benefit of Maidstone Borough Council's customers, inverted commas, that would be probably 500,000. So my observation is you can have, as an accounting firm, whatever standard you want, trying to apply it across all of your clients. But for Maidstone Borough Council residents, a materiality of 2.7 million with reference to the volume of the revenue that goes through looking after Maidstone Borough Council's direct residents, that is 10%, which strikes me as far too high. I'm not asking you to repeat, to come back on that. As, I think you've answered it well. I don't agree with it at all.
I can give another bit of context. So the 2.7 is we apply it to a particular balance or an area of the accounts that we would look at. So if something in the accounts is above that 2.7 million threshold, that is something that we would bring into our testing and that we would review. If there are areas that we feel are lower, but we would still want to look at it, we have that ability to bring something that might be out of scope for that 2.7 million, but if we have a reason to look at it from our knowledge of the authority or what's going on, then that's within the audit scope. We can bring that in.
You had another question?
But the final comment on that, it would be interesting to know how many, is it line items, gross categories come in with that materiality compared with the number that would come in if it was actually roughly 500,000. But that's an observation. The question, if I may, is I note on page 24 that for the last financial year, 24-25, 7 out of 73 members did not complete the declaration form. For 25-26, will you be naming those members who do not complete the forms? Thank you.
Thank you. We tend not to name people in our reports. We would look at anybody that didn't return their forms and look at what procedures management has gone through to make sure from their perspective there are no conflicts that need to or related party transactions that need to be disclosed. But as far as possible, we want to make sure that all forms are returned so we can have that assurance. If the forms aren't returned, we also do ask for specific representations from management in the letter of rep that they've done all that they can to ensure that there's nothing there that needed to be disclosed.
On that point, actually, because thank you, Councillor Cooling, I was going to come into that. So if I could ask officers present. I realise you have to do everything that you all can to make sure that we're compliant, but elected members can be quite difficult. If we were looking at another part of the audit and the percentage was nearly 10% failure rate, then there would be very serious questions being asked. Do we use any of the council's group leadership mechanisms or the role of chair of this committee at any point in the process for receiving the forms to nudge fellow members in the right direction? And if we don't, is it something that we need to look at?
I think it's a helpful suggestion from the chair. We'd be very happy to take up the offer. We haven't used, well, as you know, we haven't used you in the past, but if you're offering to do so, I think we'd be happy to take that up. Hopefully
yeah,
it won't be necessary, but
hopefully not necessary, no. But you know, as I say, I would expect any member at full council to be interested in why a target anywhere else in the audit was being missed by nearly 10%. So, yeah, can we offline just perhaps take up how we put that into a process? And I'm quite happy to write to group leaders to encourage them to remind their members.
So I think the other thing we need to remember, the actual committee process, in terms of you having to, as part of any committee, you have to say whether you've got any particular allegiance to a company or anything like that. So the actual day-to-day process of the committee will also try and validate some of that. So I know we try and do it yearly through a form, but the actual day-to-day governance will also try and do some of those checks. So the bit that audit look at is the yearly assessment. We always say that the actual BAU process does that assessment as well.
That's helpful to know. I think from my position, and I don't think anybody in the committee is going to wildly disagree, but please do let me know if you feel differently. I think, you know, we have to hold ourselves to the same standards as we expect to hold officers to, and it's a disappointingly high figure. So if we can, and I doubt very much that it's anything other than just a forgotten piece of administration, but it still needs to be done. So if we can improve it, I'd be very happy to help. Are there any other questions or comments? Councillor Greenham.
I just wanted to ask, because it was relating to 24-25 and it involved 73 members, obviously during that period of time we did change members because we had an election period. So is it that the 7 could actually be members that had stepped down during that time? Because it wasn't that we had 73 actual members at a certain point.
It may be, that is a risk when we have an election period. You're absolutely right, yeah.
Mr. Dobbs passed some questions on that he wanted answers to. The first one concerns Grant Thornton's report. It's actually a very gentle question and not difficult to answer. You've already heard about a change in the accounting code which is affecting the 25-26 audit. He's asked whether there are any further changes coming up, and I can give a bit of an insight into this because I'm a member of what's called the Better Reporting Group that CIPFA has established to recommend changes, and we're not proposing, CIPFA this is, are not proposing any major changes for 26-27, but it's likely that there will be some more radical changes in 27-28, which is actually possibly Maidstone's last year, but better late than never. So that's the answer to his question.
Any other questions or comments on this item before we move on? No? Okay, thank you. So that takes us to the item 12, which is Internal Audit and Assurance Plan for 26-27, which begins on page 41 of your papers. I'll call upon Catherine Woodward, Head of the Mid-Kent Audit Partnership, to introduce the report.
Thank you, Chair. So agenda item 12 on page 41 of your agenda pack is the Internal Audit and Assurance Plan for 26-27. So the Accounts and Audits Regulations 2015 require that the Council provide an internal audit function, and part of this statutory requirement is to do so following relevant audit standards. So hopefully you'll recall at meetings last year we spoke about the new Global Internal Audit Standards and the accompanying public sector application notes, and they outline the requirements for me to provide you as the Head of Internal Audit to create and deliver a risk-based audit plan to provide assurances over the Council's internal control, risk management and governance processes. So last year we introduced a new approach to how we construct and deliver the audit plan, which has a much greater focus on ongoing risk assessments to ensure that we've got flexibility and adaptability to support the organisation through its continually changing environment within the public sector, and also with LGR coming up as well. When we complete the assessments to determine what can be included in the plan, we cover off things and we consider corporate risk registers, corporate plans and strategic priorities, if there are any compliance requirements that we have, local and national issues, external audits views, our own organisational knowledge, past audit results, outstanding actions. We get input from heads of service and directors, and we look at committee minutes. We reference the annual governance statement and also member feedback to ensure that we've got a very broad assessment of what needs to go into the plan. When we've gathered all of that data, we then focus on how we prioritise those audits for the plan. And we look at criteria such as financial impact, confidence in the existing processes that are already there, reputational significance of the services, susceptibility to change, susceptibility to fraud, and regulatory compliance. In addition to that, this year we've also added in additional criteria around local government reorganisation and what impact that what we deliver from an audit perspective and what we need to deliver to support the council as well. So this information can be seen point 3.3 on pages 49 and 50 of your packs. So all of this work has resulted in a list of intended work, which you'll see on point 3.7 on page 51. So we've prioritised these audits into essential audits that we will deliver. There's a list of high to low priority audits that we'll deliver next, starting obviously with the highest priority, while we continue to risk assess throughout the year to make sure that we provide sufficient audit coverage across the whole breadth of the council. So this plan before you represents that balance between defined expectations with a bit of flexibility as well. So I'm happy to take any questions that you may have, and there's also a couple of questions from Mr. Dobbs that I'll pick up after any other questions as well.
With members' indulgement, I'll take Mr. Dobbs' questions first, and then we'll go to the committee.
So, Mr. Dobbs' questions. He has asked why the proposed audit of garden waste is essential and asked if I can explain the background of that to you. So the reason that the garden waste audit is considered an essential audit this year is that since the garden waste has been provided by Maidstone Borough Council, we've not yet looked at it from an audit perspective. And last year there was a change in the subscription process to make sure that it all aligned with a specific year, and they had quite a significant change last year. So it was on the plan last year. They asked us to pause that audit while they implemented some of the changes to the subscription service. So that's the reason that we have now brought it up as essential that we need to deliver, because we feel that we just need to make sure that everything is in place with that audit. The next question that Mr. Dobbs has raised is around resourcing, and he's asked if I have any confidence that the vacancies that we have can be filled during 2026, And will the audit days that are being brought in from our contractors swap be sufficient to mitigate this? So we have recently just undergone some recruitment, which we've had some partial success with, which I'm very pleased to report, which has obviously bolstered the number of people in my team, which is great. We still have the arrangement with our contractors, and the arrangement we have with them allows us flexibility to purchase days essentially as we require to make sure we can deliver the audit plan for Maidstone and all of our other partners as well. So I'm very confident we're in a good position to be able to deliver that work that we need to. So again, happy to take any other questions.
Thanks. Any other questions from committee members? Councillor Cooley.
Thank you very much. Page, can I see that? 51 it must be, your priorities. There are two comments, but the first one, perhaps I'm most surprised that legal services, which was last audited to 1819, is only put at medium priority despite the fact it was judged to be weak then. And this is an important governance issue, you know, cutting right across the council. And by the look of it, there can be no assurance it will be audited anywhere in the foreseeable future, given this list. So should this committee be concerned that legal still languishes towards the bottom of this priority table when it is such an important function right across the borough? Thank you.
So I can come back on this, and it actually quite nicely links back in with the point that was raised on the previous item. This audit specifically, that was 2018-19 and was weak, was around declarations of interest. And given the point that was raised earlier, and the fact that that's been picked up again by external audits as well, the reason that it's sitting as medium is because of the overall impact. When I take into account financial impacts, susceptibility to fraud, those kind of things, regulatory compliance, it doesn't push it high enough into what I call the high risk areas. However, I'm more than happy to take this away. And when I said about the flexibility with the audit plans, what we're doing is we're actually reviewing them quarterly to see if those risks have changed. And, you know, if, by all means, if the committee wishes me to bump that up the list, then that's what we'll do.
Councillor Cooley.
I may have misheard, but if declaration of interest is your only interest in the efficient functioning of legal, then I worry that perhaps the effectiveness of legal in preparing contracts which are fit for purpose, their oversight of procurement process and so on, I mean, I would have thought legal needs a far wider review than declarations of interest, but I may have misheard you. Apologies.
Yeah, so sorry, I possibly wasn't clear in what I said. This bit specifically was just the declarations of interest audit. With legal, yes, we do break that down into multiple areas. So what you're seeing on here is just essentially what is due at this point in time. So there are other audits, particularly around things like you've mentioned with procurement contracts. They've been done quite recently. So please don't be concerned that there's no assurance in those areas. That is just this one piece. The reason that we've got to be determined on here in terms of the audit is to understand what is the biggest risks at this current moment in time within that legal service. And one of the questions that we're going to be asking and working with the service is around LGR. So let's take declarations of interest. If we know our geographies in July, is that a piece of work that we do across boundaries to understand how each organisation does this? So these are some of the questions that we're asking. Basically, legal's on here because we need to do an audit in legal, and that will be something that we will flesh out as we get through the year.
Councillor Cooley.
Question, if I may. On page 55, it goes into resources. You've already touched on that to a certain extent. My question is, the volume of resource put to MBC is roughly 20-25%. Do you get a lot of benefit of cross-fertilisation from the studies you do on other councils? Does it help your perception of what you should be looking for and are looking for within the borough? Thank you.
Absolutely. Working in a shared audit partnership, working across multiple authorities, provides so much benefit to each of those authorities. That's the whole purpose of having a shared service, really, is to be able to get that benefit of cross-working. What we're trying to do, and we've been trying to do since I started, is to try and coordinate the plans so that we're doing the work across them at similar times so that we can get that benefits, but we'll always use that work and use it as case studies and benchmarking where we can. We sort of experimented with one auditor doing the same audit across all 4 partners, and that's been really, really useful where we can do that approach because, we get sort of one auditor's view on how everybody does things slightly differently, and the organisation does benefit from that learning as well.
Are there any other questions or comments on this item? Councillor Cooch.
Sorry, it might just be something that I've missed in the paper, but on page 51, what's the difference between where under previous audit it says new and where it's just blank?
It is a very good question. So where it's new, that is something that has never been in a plan or it's a new area. So the housing standards audit, this will primarily focus around the new renters reform bill that's come into place. So that is something that's totally different, it's never been in the plan. Some of these areas that have just got blanks and are not new are where they have been in the plan before, but we've not necessarily completed an audit in that area, but they're known quantities to us in terms of what the service should be, whereas the new ones are things that are totally new to us as an audit team.
Is that satisfactory? Councillor Bowick.
Just a question on page 51, the public remit where it's got waste crime team, that doesn't seem to be audited. Was it the last audit was meant to be in 2019-20 and it's got not assessed. Considering the increase that's happening, when is that going to be assessed? And
So that audit is on this year's plan. It is an audit we are doing this year. The reason that it says not assessed there, and a few of the audits from 2019-20, that was obviously the COVID year. So a lot of audits were started, however, priorities were pulled away, so a lot of assurance work was not completed at that point. So there is some assurance work there from the past, but not enough for us to be able to provide an assurance rating. So that audit was done at that point. However, it is now due and it will be looked at this year. I've even had one of my team express an interest in doing that audit, so that's really good and we're pleased to hear that.
Are there any other questions or comments? In which case, this is a report for decision. So the recommendations are as follows. 1, that the internal audit and assurance plan for 26-27 Appendix 1 to this report be approved. This includes delegating to the Head of Audit Partnership to keep the plan current for in-year emerging risks as set out in the report. Secondly, that the Head of Audit Partnership's view that internal audit currently has sufficient resources to deliver the plan in a robust Head of Audit opinion be noted. And finally, the Head of Audit's Partnership Assurance that the plan is compiled independently and without inappropriate influence from management be noted. I'd like to move from the chair that we agree those recommendations. Could I have a seconder? Councillor Cooch, thank you. Is that agreed, members? And just for Debbie's sanity and apologies to our guests, the item at 11 was for noting and I didn't close it properly, so can I have agreement that we note item 11 as well, please, members? My bad. Surprised nobody told me off. I'm big enough and ugly enough to admit when I've made a mistake. Right, so that, unless someone tells me I've made another mistake, that moves us on to item 13, which is the Local Code of Corporate Governance, which you'll find on page 56 of your papers. I call upon Angela Woodhouse, Director of Strategy, Insight and Governance, to introduce the report. Thank you, Angela.
Thank you, Chair. So Appendix A to the report sets out the updated local code of corporate governance. The code sets out how the council discharges its responsibilities for good governance and provides the framework through which we demonstrate accountability, transparency and effective decision making. The March 2026 update reflects our annual review and includes a number of targeted changes to ensure the code remains current and accurate. These include updates to reflect the council's current committee and decision making arrangements, strengthened references to risk management, internal control and the use of assurance, updates to key strategies and policies that support the governance framework, and some minor clarifications to roles and responsibilities to better reflect how governance operates in practice. And the update has been through the internal corporate governance group as well for their comments, and they've been reflected. The revisions do not change the Council's governance principles, but ensures our code remains aligned with the Sit for Solace framework and the addendum. And we continue to provide a clear and robust basis for our governance arrangements. So this is the code we use to assess against for the annual governance statement that you'll see later on this year. And I'm happy to take questions. Did you want me to answer the question we had from David?
If we have a question from Mr. Dobson, let's take that one first.
Yeah, so we had a question ahead of the meeting about whether this update reflected the Delivering Good Governance in Local Government Framework Addendum. So that was guidance that was released by SITFA and Solace in May. And I can say, yes, it does. It does reflect that update. And you'll also see changes to the annual governance statement to reflect that as well. And it's things like making sure we show the behaviours and values, not just ticking it, and make sure it's very specific to our local authorities. So we talk about our corporate strategy, our values we have in place, and our particular committee arrangements rather than generic, but we didn't do that really anyway, but we've made sure it reflects it fairly and appropriately. And the annual governance statement will have a forward look to it as well, which is the other thing that sort of come in as part of the guidance. Yeah, happy to take any questions. Thank you.
Thank you. Are there any questions or comments on this item from the committee? Councillor Cooling.
I see this started off, well, the first revision was 2013, so I'm guessing it originated 2010, 11, 12. Question, was the structure of the first ever version similar to this, tabular structure, matrix structure? Was it similar? And if so, I'm probably the only one, I'd be interested to see a markup, a compare between the latest and the first version, if they're similar in structure. Thank you.
So the way that this process would work is that once this committee has agreed and adopted the updated version, that becomes extant. So the relevance of the committee's prior decisions through that process is essentially what you would be asking to look at. Now, if the department can indulge you with copies of the archived versions, we may be able to do that, but from the committee's perspective, it's already gone through the process of what you describe incrementally, and so I don't think there's value in bringing it back here, but if there are archived versions that you would like to see, Mrs. Woodhouse can provide.
If I would welcome being indulged, but I would have thought the purpose of doing a compare between the original and now, I don't know how many officer hours go into this, but it would give me a sense, personally, a sense of value, whether these multiple updates, presumably each taking roughly the same amount of time, has ended up in a gross variation between the original and what is likely to be the latest version. So if you will indulge me, I'd rather it didn't come through in hard copy. Well, I suppose I could scan it, but I would welcome seeing the electronic version of the original, and I can do the compare myself if I have the electronic version of whatever is now adopted, and then I might comment at the next committee about value for money. Thank you.
Angela?
So it's best practice to do an annual review, so I was expecting a slap risk because I didn't do one last year. So I'm interested in your take in terms of the amount of officer time. The other thing I will say is we had a new code in 2016, so that created a need to completely review and rewrite the code of corporate governance. But I'm more than happy to supply you with previous versions, and you can have a look at how it's changed. But thank you.
Are there any other questions or comments on this item? Okay, so the decision at hand is to approve the updated Local Code of Corporate Governance at Appendix A. I'd like to move from the chair that we do so. Do I have a seconder? Councillor Travinsky, thank you. Is that agreed, members? Lovely, thank you. That brings us to item 14, which is the budget risk assessment update. I call upon Mark Green, Director of Finance and Resources, to introduce the report.
Thank you, Chair. As usual, this report focuses on the risks facing the Council, and it's absolutely essential to fulfil your remit that you consider this on a regular basis. So the report is helping you to do that as members of the Audit, Governance and Standards Committee. And as last time, the report now shows not just the risk that we've identified, but their rating when mitigated, because in most cases we can mitigate the risks. And you'll see from the report that there are a couple of risks that are still black, the worst category of risk, even after mitigation, and those are to do with inflation and the Council's capacity to deliver its capital programme. And if I talk about those in turn, first of all, inflation had always been identified as a risk. With war in the Middle East, it's become even more of an issue. It's not so much of an issue so far as the current financial year is concerned, 25-26, because we've only got a couple of weeks to go, and based on figures so far, we can be fairly confident that we'll come in within budget for 25-26. For 26-27, actually a lot of the Council's costs are fixed in advance, in the sense that, for example, salaries, which account for about 50% of our budget, a settlement has already been reached with employees, so we know more or less what our pay bill will be next year. Similarly with contracts, the indices that by which those are uplifted every year are backward looking. The issue really becomes one when we look at the following year, 27-28, and we'll be having to think very carefully when setting the budget for 27-28 about what inflation will be, what the future path of inflation will be. And the reason why it's a challenge even after mitigation is that, as you all know, we are quite constrained in what we can do. We can only put up council tax by the referendum limit, which we expect to be 3% in 27-28. The government, in some cases, does increase the referendum limit. They did it in the COVID year, but we'll have to see what happens to inflation and what the government's response is. So we're constrained in what we can do. And if inflation is running at more than 3%, or if we expect it to run at more than 3% in 27-28, and the referendum limit is only 3%, then that will pose a challenge, and we'll have to look at where we can save in order to deliver a balanced budget for that year. And 27-28 may be Maidstone Council's last year, but we want to hand over the Council's finances in good order to a successor authority, so we can't just wash our hands of the problem just because it's the last year. So I mentioned the fact that inflation is becoming a particular issue with war in the Middle East. The other thing that becomes more of an issue with the kind of challenges that are being highlighted with war around what happens to markets, and that ultimately would have an impact on the pension fund, because the pension fund depends on the returns that it can get. Pension fund, Kent's pension fund has been doing really well over the past few years, and in the same way as equity markets generally have been doing well. But if there's a collapse in markets, then that would affect the pension fund and could, not in the short term, but ultimately lead to us having to put further contributions into the pension fund. So inflation absolutely is a top risk for us. The other big risk is around delivering the capital programme, and We've got a very ambitious capital programme, some of which, because it's a 5-year programme, some of it extends beyond the period where Maidstone Council will be an independent entity, but the administration is very keen to do as much as possible over the next couple of years. The biggest element in that is the housing programme, and here again we are constrained because funding the capital programme depends, certainly so far as the housing programme is concerned, on external funding. We rely on funding from Homes England to fund the social and affordable housing programme. Homes England contribute the bulk of the cost, far more than the council itself does. So we've got developments underway at the moment for which we've already secured Homes England funding, but we're about to be submitting a bid for the next tranche of developments, which includes Maidstone East, Springfield Library, in total about 300 units, where we do depend on Homes England supporting that. Now, Homes England is charged with developing social housing across the country, so we're hopeful that we will get that funding, but although we'll be making the best possible case for funding, it is to an extent out of our hands. So that is a big risk, whether we can secure the funding and deliver the capital programme. That is the other really big one. I haven't mentioned local government reorganisation such as a risk, but that is also in there as a risk, and certainly over the next couple of years it will be something we're having to pay attention to alongside all the day-to-day business of the council, so that is also captured in here, not right up there with the first two risks, but it is a risk that the register acknowledges over the next couple of years. So I hope that's given a flavour of the things in the report, but happy to take questions and hear your suggestions for other things that might need to be addressed in the risk register. Thank you.
Thank you, Mark. Before I go to the committee, were there any questions on this specific item from Mr. Dobbs?
Not on this one.
No, right, okay. Have Councillor Trubinsky and then Councillor Titchener.
Thank you, Mr. Chair. First, this report, I know you produce it for us. Is it actually a working document? I mean, do you use it in between the meetings we have, and which I assume it is? And how, with the war, it is a problem, obviously. We've all seen the petrol prices go through the roof, really, almost, and I expect it's not finished yet. How quickly would our finances be affected by the changes, such as increased inflation, and how quickly can we respond to mitigate them? I suppose that depends on what it is specifically, but just a sort of general comment on how you would be handling that really would be useful.
Thank you, Councillor Trubinsky. On the first one about it being a working document, yes, it is, and it's integrated with the other work that we do in the council on risk management. We have a corporate risk register which is reported to the CTCS pack and cabinet quarterly, and that summarises risks. Individual directors and heads of service maintain risk areas, so we look at risk quite holistically, and this is the budget risk specifically, but absolutely we look at it all the time, and as you can see we report regularly to members on risk. On the issue about how soon inflation would hit us, as I said in the introduction, it's not immediate in most cases because we can be fairly confident about what most of our costs will be next year. I mentioned salaries, the pay settlement has been reached for next year, contracts, we're locked in with those. In some cases there'll be a hit more quickly. For example, we know that the actual cost of energy is reflected in what we pay the contractor for our leisure centres, and we have swimming pools at Moat Park and at Lock Meadow, which use up a huge amount of energy. So that is a that will be a hit. Okay, it's not great in the overall scheme of things in the budget, but that's one of the ways that we'll see an immediate impact. Likewise, fuel for the depot is an area where we're likely to see an immediate impact.
Councillor Titchener.
Thank you, Chairman. Yes, going on about inflation, very important subject. I remember the oil shock in the 1970s, where I think inflation in this country was over 20% at one stage, something like that. And I think tends to be a view in this country, which I find rather depressing. The inflation actually grows on itself, and it could easily hit 10% by August, because things tend to multiply when the inflation effects come through to the country and the economy. And it's difficult to judge this. It's very variable, I know. But I was looking at paragraph 2.18 on page 90, where it talks about Kent County Council and Medway Council account for 87% of the existing authorities, and Medway has applied for an EFS, Exceptional Financial Support. Now, my understanding is that Mason's a very well-run organisation, but is there a danger point in your, I know it's very difficult to judge this, and you may not even want to say it, it might be too confidential, but is there a percentage increase in inflation that will set the alarm bells going in a big way? If it hits 8% or 9%, is there any sort of workings behind the scenes to think in terms of EFS? Because then the government probably wouldn't pay the money anyway, probably don't have any. Just curious to know what the future is if it's bad.
You referenced exceptional financial support, and it's mentioned in the report because when we look at the environment in Kent after local government reorganisation, there will be new authorities, and one of them will pick up the area that Medway currently covers and will have those financial pressures. So it's an issue post-reorganisation. There's, I would say, quite a low risk of Maidstone having to go for exceptional financial support, even with higher rates of inflation, because we have a strong balance sheet. We're in a relatively good financial position. We certainly wouldn't ask for exceptional financial support just for the sake of it. It's really confined to authorities that have big challenges. Medway does have, because first of all, it's responsible for social care, which is a huge drain on the resources of upper tier authorities. Also, Medway has historically had quite a low council tax, which is all very well, but it's meant that they've had less resources to deliver all the things that they need to do as a council.
I think it's worth noting as well the wider context, of course. I think that some of the risks that you look at in terms of local government financing, they affect the country as a whole. And of course, central government, should inflation start to run away with itself, has to review what levers it's pulled as well. I would be surprised if it was going to ignore other levers and simply leave local authorities to sort of fall over like dominoes as they hit the relevant marker, so to speak. But I think it's a valid one to ask about. Were there any other questions? Councillor Barwick.
Yes, on page 90, 2.17, I think that's summed up the risks of the reorganisation, of government reorganisation. I mean, I was around when Medway broke off from KCC, and that took 2 years to sort out. And I think people need to really understand, and other councils in this council, how time-consuming that is going to be once we know what the government says we can do, because it goes down to the finer details of where people work. I mean, it won't affect probably Maidstone Borough Council so much, but when you're merging with other councils, there's a lot of work. People's contracts, terms, conditions all need to be assessed and made sure they're accurate. It's a lot of work that's going to be involved there, and a lot of risk.
Again, I think that's a fair point, and one that will be replicated around the country, no doubt. Councillor Drabinski, you wanted to come in?
Yeah, it's just a thought. Yeah, presumably the fuel increases will affect Suez quite a bit. And is there any way our contract can be varied on costs and things? You know, if they're suddenly they've got a 20% increase in fuel or whatever, can they say demand any more money from us?
That all depends on the individual contract. I mean, in some cases, as you know, a contractor can declare force majeure. There's various things that could happen, but it's very difficult to generalise across all contracts.
I think one of the things that's worth taking assurance from there, though, is, as Mr. Green's already alluded to, this is part of an overall approach to risk management. So if, or as and when, inflation increases, I expect that to be being reviewed by corporate management, and equally, if there are contractual clauses that are going to come into effect, or contractors that start to reach out and say, actually, we have viability issues, then I would expect this risk management approach to capture it, and that's why we have it here. And it's why we have it set up as against the raw risk and the mitigated risk, so that things that needn't look too disastrous don't look too disastrous. But then as there's many green and amber risks on this report, fortunately at the moment, this committee and the relevant policy advisory committee and cabinet will be able to see, as the situation develops, what officers' view on the changing risk dynamics are, and we will have the opportunity in due course to quiz them on what levers they're pulling and what central government is telling them they're trying to do to mitigate it. I think it's fair to say there's a lot of uncontrolled variables in the situation at the moment that's certainly well above Maidstone Borough Council's level. Were there any? Councillor Cooch.
Thank you, Chair. Bear with me while I try and ask this question. In terms of our risks to things specifically like fuel prices, I know we're doing work on electrifying our fleet and have solar on some buildings. I'm sure that work pales in comparison to things like heating a swimming pool with fossil fuels. But are we any more resilient to external shocks like the events in the Middle East because of that work? I assume the answer is probably not very at the moment. But how locked in are we in terms of any green energy that we do buy in, or any electricity that we obviously buy in? I know that obviously there's conversations at the moment about household price caps until the summer, but how locked in are we on electricity that we buy, and also then anything that we sell or use from our solar arrangements? I don't know if we're part of power purchase agreements and things like that or not. Thank you.
Thank you, Councillor Cooch. Certainly, we do aim to reduce dependence on fossil fuels, and it's part of the Biodiversity and Climate Change Action Plan. And there are metrics, and I'm afraid I can't quote where we are on reducing our carbon footprint, but it's certainly part of the targets for that. I'll have to come back to you on the detail about to what extent we're locked in with contracts. I know we do have contracts going over 12 months or so, so we have a bit of reassurance that we're not going to be paying the very current prices, but that's only good for a certain period of time. But I'll have to come back to you on the specifics of how long we're locked into the current prices.
Councillor Green, and you had a question?
Yeah, it was in relation to item T on the risk register, the impact of KCC's financial challenges and savings that they're making. So I work for a local charity. One of our contracts is with KCC to support people over 55. That's been 100% cut from the 28th of February. I'm aware that's going to have an impact on MBC. There'll be more older, vulnerable people coming directly to MBC seeking support. Obviously, it said the existing controls would seek engagement with KCC wherever possible. So I just wanted to ask, how much are KCC engaging with us to reduce these risks?
We have a regular meeting as a senior leadership team between Maidstone directors, Angela, me, Chief Executive, and William Cornell, and their senior directors. So that is quite a useful forum for talking about some of these areas, but it doesn't cover the whole lot. And the quality of the communication, I think it's fair to say, varies across different areas within Kent County Council. It's a big organisation, but well, this risk is here, and it describes exactly the problems that you're talking about, which is that reductions in funding for the voluntary sector have an impact on us. Sometimes there's even more direct implications in savings that Kent County Council are making, which would directly shunt costs onto us. So we are very aware of those, and we're using all the levers we can pull. Another thing I would mention is that it's helpful for us that we have our leader, who's a member of Kent County Council, so he uses that to make the case to try and address some of those issues. So we're pulling all the levers we can, but Kent County Council does have severe financial challenges, and they seem to be quite happy to push the problem onto other people, as they're doing in this case.
Councillor Cooling, you want to come in?
I have three questions. The first one, if I may, page 89, paragraph 2.14. It states that the deficit in 27-28 can be met from reserves. Now, I haven't got the medium-term financial statement on my eyelids, but is there going to be a deficit in subsequent years, and is the current management plan to just take that out of reserves, and is that really a sustainable approach to life? That's the first question mark, if I ask. May I ask that one first?
Yes, in the 5-year projections that went to Budget Council last month, you'll have seen, if you looked at them, that there's a balanced position for 26-27, but there is a deficit for 27-28, which, as it says here, is increased. 28-29, although Maidstone Council probably won't exist then, if it were to continue, actually at that point we move back into surplus. The other thing I'd say is that we do have easily enough money in reserves to cover a deficit in 27-28. That's not ideal, and I hope when we come to set the budget for 27-28, we'll actually be able to set a balanced budget, and we'll be working to try and do that. But we do have the reserves to cover a deficit of the scale that's indicated here.
So if I feed that back to you, it is not a policy just to use reserves whenever we can find. Thank you. Second question, at our last meeting, this social housing, which sounds strategically very good to me, there was going to be a separate accounting device, so you'd have to remind me what that is. Is that going to come into effect in terms of presentation of financial material from the start of this new financial year? That's my second question, if I may ask that.
Yes, thank you, Councillor Clearing. I believe what you're referring to is the housing revenue account, which is the mechanism goes right back to the 1980s, where local authorities have to account separately for social housing. And when you get to a certain number of social or affordable housing units, you have to open an HRA. The position's complicated for us because we've got local government reorganisation coming up, and we don't know what the future of Maidstone itself will be, we could go into a West Kent unitary or we could go into a Mid Kent unitary. In West Kent, none of the authorities in a potential West Kent unitary, Tunbridge Wells, Tunbridge and Morling, Sevenoaks and us, have an HRA. So we would have to set one up. If it were Mid Kent, which is the what's called option 4D out of the different options that the government's considering, we would go into a unitary with a number of authorities, including Ashford, who do have an HRA. So that new unitary would have an HRA anyway. We wouldn't have to set one up. So we're assuming we may have to set up an HRA. Plans are in place to do that if we have to, and we would do that in advance of local government reorganisation happening.
Just a comment on that, then the third question. When the last meeting, to me, burying the social houses and their subsidies into the overall accounts for the borough led to some, I'll use the word distortion, I don't really mean that, some confusing parameters. So I'm just hoping that if you're not, I assume we'll know in a matter of months which unitary authority model will happen. And so I would hope that if there isn't this housing revenue account in whatever unitary we end up in, I would hope that you take the initiative to set one up, because we cannot plan on these unitaries happening. And I share the comment from the councillor almost opposite me that the complexities are great, so when that actually will materialise as a real unitary, I think remains to be seen. But my third question, on page 88, para 2.9, it says a correspondingly high threshold for demonstrating a business case for future capital expenditure. Is that happening, and are there any uncommitted capital programmes that are falling by the wayside, i.e. to reduce the exposure to a capex requirement and therefore a debt requirement? Thank you.
Thank you, Councillor Culling. Just going back to the point about the HRA, we're expecting the government to announce which of the options that have been put forward for Kent, or an option to be announced no later than July this year. So that at least will give us some certainty about what the future structure in Kent would look like, and will tell us specifically here whether we need to set up an HRA. So we're waiting for the government to announce what the future picture in Kent will look like. On the thing about the business case and the test of cost of borrowing, absolutely, because I mean, to take housing as an example, the new development team is looking at opportunities all the time, but the threshold is higher now, and so any new proposal that they put forward, clearly we have to pay attention to what current cost of borrowing is, and so it is a higher threshold than it's been in the past for any new scheme that's put forward.
Thank you. Are there any other questions or comments on this item? So this item is for noting. Is that agreed? Thank you. That brings us on to item 15, which is complaints under the Members' Code of Conduct papers. It's page 104. The report starts on. I call on Gary Rowland, Deputy Monitoring Officer, to introduce the report.
Thank you, Chair. Good evening, members. So my report this evening is the 6-monthly Code of Conduct complaint update for the period 1st of September 2025 to the 28th of February 2026. As agreed by this committee at the January meeting, a list of all rejected complaints are set out at Appendix 1 of the report, and the exempt Appendix 2 contains details of those complaints where a potential breach of the code has been established. that's all really for me, and I'm happy to take any questions anybody has.
Thank you. So, I'm very keen that this conversation happens transparently and in public. And what we are sitting here this evening as is audit and governance more than standards. We don't have a standards case in front of us. So I'd ask that members try to keep the conversation to the validity and assurance around the process. If any member of the committee does feel that we absolutely need to go into the detail of the exempt appendix, I'm of course happy to do so, but that will mean that we have to pause, formally go into closed session, and then come back out again in order to close the meeting. So I know, for my part, I'm happy to say I think actually we can have a discussion about whether we can take assurance from the procedures that have been followed without having to go into the details. But as I say, if anybody really does feel they need to go into the details, then we can do so in closed session. On that basis, are there any questions or comments from members? Councillor Cooling.
Please, I don't wish to stray at all. I'm sure that this parish councillor isn't the only person who misquotes occasionally on a matter of fact. So my observation is that I would have thought complaint ought to be about ethics and behaviour rather than fact, but that I'm just observing that. So I'm quite happy with what I've seen, but I'm surprised we haven't got a bucket full of complaints about factual inaccuracies uttered by us all.
Yeah, I think, Gary, if you could just clarify how we would take a complaint of this nature forward on the basis, because it seems to me the complainant's perspective would be part of the material consideration, and whether reasonably it could be judged to have fallen foul of the code. But if you could expand on that a little.
Yeah, I think you're right, Chair. I think it very much depends on the context. In certain cases, whilst something can be said to be just a statement of fact, it's possibly the way it's put across, whether it aggrieved somebody, you know, as opposed to just a simple statement. So I think it's really the context behind what was said, misunderstandings. It's difficult to, you know, to give an answer that encompasses everything, but yeah, it's very much dependent on the specifics.
I think as well, when sometimes these complaints relate to social media posts, and then essentially what might have been a relatively straightforward conversation between two individuals over a matter of fact is a published statement that someone can feel is demonstrably untrue, and they may not wish to have the debate in public. And I would say from experience of complaints that do go through the process and aren't just rejected, social media is definitely something that people fall foul of. Councillor Titchener.
Thank you, Chairman. We discussed this some months ago, and I think you've taken it on board. But I think one has to bear in mind that parish councils are not sort of all cosy little clubs. There are a lot of factions in parish councils. There's a lot of bitterness. There's a lot of hatred, even, depending who you're talking about. And there are some very nasty accusations made by certain people in parish councils. And I am concerned, and I said it before, that if you name anybody, then you have to be 100% certain that it's correct, because somebody's reputation can be ruined by a false accusation. And that's a worry, I think.
I think that's a fair comment. I think on the basis of what we have before us today, the process has worked as designed to our satisfaction, unless anybody has any further observations or comments. Councillor Barwick.
I just think there needs to be a warning: don't use social media as much. I mean, it's laughable sometimes, isn't it?
I think that horse may have bolted, but if one were to ask oneself, would I put it on a bus stop in the town centre rather than on social media? That might be a good guide to the wisdom of it. Okay, so the report is for noting. I'm assuming that we agree. And that is the last item on the agenda, so I declare the meeting closed. Thank you, everybody.